Could it be something bigger? And let me make something very clear. The interesting thing about where this is all coming from, and you see draining of the exchanges, and now we're this close to watching the LBMA blow up.
Let's welcome another important video featuring Andy Schectman, CEO of Miles Franklin. Something big is unfolding in the gold and silver markets, and the mainstream isn't talking about it. What's really happening behind the scenes? Is this the final warning before a full-blown financial reset? Stay tuned. Andy Schectman is about to reveal the truth that could change everything.
70 million ounces of silver were drained from the LBMA in January. It's an all-time high monthly record. 20% of the float gone. And then here in February, another 8.6 million ounces out. So we're seeing tremendous amount of gold and silver being delivered away. And I think it is an existential threat to these banks. But when you realize that the public is being misdirected, the public has been misdirected into a risk-on trade at the worst possible time. In fact, right now, hedge fund exposure to the Mag 7 is down to a 22-month low. So the big money is moving in a different direction. They're all of a sudden kind of sliding to the risk-off category. When everyone's been talking risk-on, you have 6-to-1 insider selling versus buying. You have the Atlanta Fed now revising their GDP numbers down to negative 2.8 from 4% for the year. That's what they think we're heading into. So at the same time, the public is going all in on Bitcoin, on Nvidia, on Apple. You have the smartest money in the world. And let me make something very clear. It would be far easier for someone to write me a check for $50 million to buy gold and silver than it would be to stand for delivery on COMEX or the LBMA. You are talking highly sophisticated traders. And I think the common denominator in highly sophisticated and very wealthy is they know the information. Who are the sovereign wealth funds? Is it the central banks wearing a different hat, or the commercial banks wearing a different hat, or the very, very, very connected wealthy elite taking $4 billion in delivery onto COMEX from JP Morgan, who only does it on behalf of customers? So my point is that I don't care what market you pick, the insiders always move before the public. Is it ironic that the insiders are selling 6-to-1 and the hedge funds have their lowest exposure to the Mag 7 since for 22 months, at the same time the public's moving in that direction? Or how about what has the public been jumping into for the past 2 years as the central banks net have been selling? Oh yeah, that's U.S. Treasuries. 7 trillion record in money markets, all invested in Treasuries. All of the people chasing yield in Treasuries, and 1/2, to Rick's point, of 1% allocation into gold and silver, while the most well-funded and, more importantly, well-informed traders in the globe are not only copiously accumulating gold and silver. The point I'm trying to get across is the repatriation, the taking possession of, removing counterparty liability. And in a world that is so systemically interconnected, incestuously so, that's a problem when dominoes start to fall. To your point, what could happen? Well, these bullion banks aren't just bullion banks. They're the biggest banks in the world. And these are very, very large Western money centers. You could say it's Deutsche Bank, UBS, Standard Charter, at the big European banks. Or you could say it's Bank of America. Is there any coincidence that Warren Buffett's been dumping all his Bank of America? And Ted Butler, a fantastic gold and silver analyst of the COMEX, who passed away, God rest his soul, before he died 6 months ago, was screaming that it's Bank of America who has 1 billion ounces short on paper in silver and 30 to 40 million ounces short on gold. Now, I could go into a long discussion why I believe silver has been manipulated. And I would say gold has been manipulated for a very long time for something called Gibson's paradox. It's the inverse relationship between real interest rates and gold. And forever, they suppressed gold because they maintained a situation of an illusion of wealth in a low interest rate environment where people's stock portfolios and their homes and 401ks all went up in value because rates were suppressed. It created distortions in asset prices and misallocations of capital and resources. Well, if you do that, you have to step on gold, because if gold doesn't pay a coupon or no return, well, low interest rates, Gibson's paradox would say, well, gold should be going much higher. But If you have very high interest rates, well, Gibson's paradox would say, well, you can buy treasuries with safety. The only difference this time is who wants to buy treasuries from the nation who's the most largely indebted nation on the planet? They've gone too far and they suppressed interest rates for too long and created these distortions. And now the world is saying, I don't have an appetite for your debt when a country that invaded Iraq 20 years ago is still occupying their country, went there under, false pretenses, looking for weapons that were never there, but they're still there, sanctioning half of their banks, still for trading with Iranian banks to buy liquid natural gas, holding all of they made 90 billion in revenue in 2023 from selling oil. It's at the New York Fed. At the end of the year, they asked the Biden administration for $1 billion. We said no. We'll give it to you next year. And this is their money. So they're kicking Western coalition forces out. They're making trading in dollars illegal. There are no more green bills in any bank in Iraq. They got them all out. No dollars at all, because they look at us as not being good stewards, let's say, not being fair. Well, from a world perception, if that's how we operate, well, why is it our prerogative to say what Russia did is wrong? I'm not making a comment on any of this. I'm just saying this is how the rest of the world looks at it. Well, they can do that, go there and say, well, sorry, we didn't find the weapons. We destroyed your country, toppled your regime. We're still here 20 years later, but you can't do this. So we're going to confiscate your $5 billion in U.S. treasuries and give it in the form of weapons to the Ukraine, the country you're in a war against. That's a line you really don't come back from. And so these countries are all saying, you know what? If they'll do it to them, they'll do it to us. We don't want gold or treasuries anymore. We want gold, which is the only other tier one asset and it has no counterparty risk. And maybe this new administration is wise enough to understand that and said, we have one chance to get all of this gold and silver back, or it will flow eastward and never come back. Because I've been screaming at them for the last 4 or 5 years that these countries have become coordinated, motivated, sophisticated, wealthy, and understand what we're doing. I'll highlight it this way. The BRICS grain exchange, which is under development, the gentleman who's running it or is behind it says, we consume more wheat and produce more wheat than the West does, but we can't control the prices. It's controlled largely on COMEX. But with the development of the grain exchange, this will change. Well, they know exactly what we're doing with the world's precious metals and other commodities as well. And so they're using it against us and have for 4 years by also suppressing the paper price and standing for delivery off of COMEX and the LBMA. And the delivery over the last 4 years has slowly been increasing. Little by little, they've been draining the world's exchanges, using that against us. And I believe the Trump administration, if I had to guess, says this can't go on anymore. So we're going to threaten tariffs. We're going to get all this back on exchange for physical. We're going to become a net importer on gold and suck all of it back as fast as we can. I think the Bank of England said, oh, wait a second, you guys, this isn't just EFP. This isn't just Trump tariffs. We got to put the brakes on and figure this out, or we will blow up some of the biggest banks in the world because they are naked short 90%. And when no one stands for delivery, that's a hell of a game. You make a lot of money with no risk until the countries that are sophisticated, motivated, coordinated, and wealthy say, we notice a loophole. We see what you're doing. We'll stand for delivery. Your Western facade of suppressing the metals to support the bond market in the West and the illusion of strong dollar, strong pound, strong Swiss franc, strong euro, that's BS. And so now I think Trump came in and said, and Bissett and his advisor said, we got to get this stuff reshored now. Now, is there something bigger in store for it? I believe there is. I truly believe that the Bank of International Settlements, which is the most powerful bank on the planet, the most well-informed and sophisticated bank, does not reclassify gold as the only other tier one asset in the world if it was not intended for something. And then you see the massive repatriation by 40 or 50 of the world's central banks. And then you see draining of the exchanges. And then you see standing for delivery. And now we're this close to watching the LBMA blow up. And if it blows up, That simply means that the banks who have been suppressing the price forever have been called on the carpet, and a failure to deliver would become systemic. And it's not just in precious metals, because these banks are the biggest banks in the world. Yeah, they're bullion banks, but they're the banks we know as the commercial banks. And could it be something bigger? It just doesn't seem like tariffs to me. It really doesn't. We've imported somewhere north of 15 million ounces of gold since, in fact, estimates have it even a little bit higher lately, as much as 20 million ounces since last year, November. And to give you an idea of just how big these imports and these deliveries are, and then where they're coming from, look, the amount of gold that's coming into the country right now, Adam, is unlike anything anyone has ever seen before. We saw the largest delivery in the history of the COMEX market in February, 59,296 contracts. That's 5,929,600 ounces stood for delivery in February, surpassing the previous largest order or delivery of 47,132 by 1.2 million ounces. This is the largest delivery ever in the history of the COMEX. And so who's got that kind of money to stand for delivery for, if you take 5,929,600, which is the number of ounces, multiply it times 2,900 plus, your calculator on your iPhone will go E. It's too big to even calculate it. We saw about 15 million ounces of silver stand for delivery in February as well. And, you know, JP Morgan, they used to have a gal named Blythe Masters who ran their trading desk, who always said JP doesn't buy for themselves. It's always for a customer. They delivered 4 billion in gold, billion with a B, to the COMEX in February. One of the largest shipments ever in the history of the COMEX market. What customer has $4 billion? I mean, we can guess. Is it Warren Buffett? Is it Treasury? Is it Federal Reserve? I don't know. But again, since November, roughly between 15 and 20 million ounces that we know of have come from London, just from London. And 40 million ounces of silver plus, maybe as much as 50 million, have come just from London to the COMEX. Now, the interesting thing about where this is all coming from is that London, the London LBMA market is supposedly a T+1 market, where the trade day is T plus 1 settlement. You're supposed to have access to your metal, in essence, in roughly 3 days. It's now turned into T plus 8 weeks. Now, that to me is pretty much a default. And their excuse is that it is a issue of manpower and trucks. So the Bank of England evidently doesn't have enough in the way of trucks and manpower to move the gold that is supposedly available for delivery. But it's important to understand that when we talk about this game of rehypothecation of paper, where the Western system has been rehypothecating or suppressing the price of gold and silver, and we can talk or debate about what the reasons are, but they have done so using the leverage of paper contracts sold over and over and over and over and over again to the same players. That right now, as an example, there are 279 million ounces of silver stored on paper in London, but only 36 million ounces are actually available. So that means that the other 243 million ounces belong to players like the Bank of England or ETFs or whoever. They're not for sale. But this is standing against 380 million ounces in outstanding spot delivery contracts. 36 million ounces available, 380 million in paper, 10 times plus the leverage or the amount of deliverable contracts than there is gold. And so you have to wonder, is it really a T plus 8 week situation now because of trucks and manpower, or have they been caught with their hand in the cookie jar? They're 90% short on their ability to deliver. And in silver, Adam, it's even worse.
If you found this information valuable, don't forget to like the video, subscribe to the channel, and hit the bell icon so you never miss an update. Drop your thoughts in the comments. Do you think we're heading toward a major financial shift? Let's discuss. Stay informed, stay prepared, and we'll see you in the next one.